Hello, everyone, and in this episode, I'm going to talk about HSBC. Um, HSBC being the bank and the largest company that's traded publicly in the UK. Now, HSBC has been hit really hard in the last few weeks by Trump's tariffs, um, and I'm going to look at, is it a buy? And the reason that I'm going to look at if it's a buy is because I myself have taken a small position in it. So you can see I have invested £2,000 on Friday, the 11th of April in HSBC, as I think that I like it as a good stock for myself for the next year or two, and I plan on holding this for a while now. So why do I like HSBC? What's good about it, and what's happened with Trump? So firstly, HSBC had a brilliant 2024. So we go back to the start of 2024. It was trading at, let's see, well, around 600, say 600 a share, and it went all the way up to 900 or nearly 900 at the end of the year. Start of this year, by February, we were at 930. So that was a real 45% gain, basically last year, which was a brilliant year for HSBC. And that was driven by increased growth and increased investment in China. So they've acquired a number of other stakeholders in other banks, and they've really driven up revenue. So it was a brilliant year. In addition, HSBC has also been increasing their dividend slowly and slowly, and then at the end of quarter last year, they increased their dividend by quite a lot, and it sits at, well, depending on the share price, sits at currently around 7% per share. So things were all going well. I wasn't thinking about investing in HSBC, but since the tariffs, it's really sold off. So from highs of 930 now down to 740. That's basically a 25% sell off. So 25% reduction. Now, why is that? Okay, so I was looking myself in part of my research at why I was buying it, and basically, HSBC has big ties to China. It owes a lot of companies there, so Citigroup, some other banks, and basically it has a large stake in China. I think it has 9,000 employees in China, and said 70 or 80 branches and companies it's involved in. And so it has quite a lot of ties, and in addition it paid, I think it was a few billion in tax in China last year, which shows that, talks about its revenue and its reporting. So what does that mean? So that means it was hit hard by the tariffs, or supposedly hit hard. Supposedly it's going to have big differences. So that's why it's fallen so much, basically. So Trump's obviously putting these tariffs for China, affecting Chinese goods. It doesn't affect services. However, obviously, a trade war between China and the US can spell economic downturn. Higher tariffs means everything's more expensive, which means that people have less money to spend. And if people have less money to spend, they can fall into recession. So the chance of a recession in China is higher, and therefore banks and everything else are affected. However, I think this is a really good opportunity for me and for anyone listening to buy HSBC. I have it as a buy at the moment. And that's because, A, the dividend. So what's the dividend right now? So it's $7.50 a share. If we look on here, we can see, let's scroll down to dividend. So dividend is around 7% per share. So straight up, you've got around 7% per share of dividend, and that's if the stock doesn't grow at all. So HSBC dividend. Okay, so let's see. Okay, so annual dividend 6.87%. So 7% dividend, and that's if the stock doesn't grow at all. Secondly, I feel like the stock has sold off well, well being a lot, and it's quite undervalued right now. It has quite a low PE. Its PE is 7. Its forward PE for the next year is 6.5, which is pretty good for pretty low for a bank. It's expected to increase its dividend in the future, and I don't think that the trade war will have as much effect as sort of the market is placed in. And I say that because I think that, firstly, I think that Trump and China hopefully will come to some sort of conclusion where even if there are a lot more tariffs in place, it won't be to the same extreme level. Secondly, I think potentially ties with Europe and the UK and other countries could be strengthened with China. Thirdly, I think that if HSBC keep raising the dividend and it gets to 8-9%, that's just going to automatically push up the stock price because people are going to be more and more interested in a high dividend. If you can't return on growth stocks, dividend is brilliant because the S&P, I think, historical gain is 11%. I only need a 4% gain in a whole year in HSBC, plus the 7% dividend, and you've returned the average. So it doesn't need much at all to push it up. Then if we look at forecasts, so let's see, HSBC forecasts, so price predictions from analysts. So we see here, buy, outperform, hold mostly. Only two or one now is a sell. So we have a low price prediction in the next 12 months of 783, a medium of 915, and a high of 1175. So I always look at the low. So you look at the low price prediction, 783. Have you bought below the low? Yes. Therefore, is it likely that you're going to, even if it goes go down a lot? No. I think it's important to look at. So if we just met the low, 5.4%, plus the dividend of 7%, you're looking at a 12-13% return in a year, which is great when times are uncertain right now. So I think that's just a quick video about HSBC, about why I would buy HSBC, why I have bought it, and why I like it. And as a reminder, why listen to me? So in the past 12 months, I will share this openly. In the past 12 months, it's been a tough trading year for everyone, including myself. Things were going well, and then recently it's been incredibly tough. So if we look at Vanguard, S&P 500, last year it's returned minus 2.3%. What have I returned in the last year? 5.2%. So earlier on the year, before Trump's tariffs, I'd returned 38% in the previous 12 months. Now, obviously more difficult. However, if you compare my rate of return, 5.2%, compared to minus 2.3% of the S&P 500, and if you compare that to a lot of other people sharing and talking about their experiences, I think it's safe to say that I've outperformed the market in this instance. So, thank you very much for listening, and I'll be releasing some more stuff soon.